Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I got Nick Fusco, CEO of 8View, a pre-IPO secondary market pricing company, and Clint Sorensen, Chief Investment Officer at WellShield, an outsourced CIO and investment research company. Okay, 3 topics today. First one's ByteDance. All right, fellas, check this out. I think this might be a first for pre-IPO stocks. ByteDance is buying back $5 billion at a $268 billion valuation. They just announced it, right? I think it's the first ever stock like this that's done this, venture-backed stock, right? So Pitchbook had them at a $220 billion valuation in March of 2023. They said that was a secondary market transaction. So this would put them up, and their applied valuation is $196 billion. So it's down from there and the secondary from the 8View data, right? So this $268 billion number would be a 37% increase, right? Just a few stats on them. So $29 billion in Q2 revenue, okay? $85 billion annually. And as you recall, like that's kind of getting close to these meta type numbers. So what are your thoughts? So Clint, maybe I'll ask you to start first because I'm sure Nick could talk about this like all afternoon. So Clint, like what are your thoughts on a buyback for a venture-backed like growth company? I mean, it's a big company, but what do you think about buybacks in the kind of the private markets?
I mean, I love it. I think it's a component of shareholder yield, right? And at the end of the day, when you look at this company, we've talked about it on this podcast before. I thought the company was cheap, especially. I mean, you could pretty much say that for all China-related venture-backed companies, right? At the end of the day, but I always thought this company was cheap. Right. Yeah, based on its growth rate, to see it buying back stock here, which I've never heard of a buyback in venture cap private, but I think ultimately it's a large company. It's buying back its own stocks, rewarding shareholders. Another reason I think to be a bull on ByteDance, and it's demonstrating it's got it's supportive of shareholders, which is a big part of governance if you're going to be buying a company.
Yeah. Okay. So Nick, what do you think? Like Clint likes it. What's your thoughts?
Can't disagree. Yeah, I think you're simultaneously acting like a public company. So whether we want to call this pre-IPO anymore, the private stock market that we were kind of spitballing about in the last month, you're also cleaning up the cap table a little bit. And from what we see in the secondary is really, really interesting here. So we were seeing the share price down around about 125.
Okay.
But it had significant buy pressure. So a lot more bids in the market than offers, especially relative to its past and relative to peers.
Okay.
So that. And then we saw, so that's our 125 at 8View. We saw a buyback at 160. So we're sub that. So maybe supporting some of the bid heavy approach. And then we're way below fund filings.
Yeah.
So it's wild. There's a gap between 125 secondary, 160 buyback, 200 is the average fund filing.
Really?
And big companies like T. Rowe Price, Bright House Financial.
Wow.
And but between those, just to get super nerdy, and then I'll throw it back.
Yeah.
We've got T. Rowe pricing at about 250, so way above the buyback. And then we've got Bright House pricing very much in line with it. So really interesting stuff from the lowest area of secondary to the highest fund. We've got a 100% differential.
Wow.
So I don't think anyone has a great concept of where this is pricing, but when you're doing a $5 billion buyback, it kind of shows that the company's very confident with that valuation.
Yes.
So I love it. I think this is a great move, really showing putting its best foot forward to the markets in general, whether it stays private or goes public. I mean, this is all signs point to kind of ByteDance looking stronger on the back of it. So very different reasons than what Clint said maybe, but I would say that it's all positive. So
it's interesting because I can't recall if it was this article or another article, right, Nick, that ByteDance was buying back the stock because the existing shareholders wanted liquidity, right? So not going public. So you got to fix this. Like, let us do a secondary. And I guess they're saying, well, we'll buy it back because it's cheaper than, or maybe they're trying to support their valuation at a higher level. I would think if you're buying it back, you feel like it's too inexpensive to buy it. Yeah, right. I mean, what do you think? Did you hear any buzz on that stuff, or have you read anything about the motivation for the buyback?
No, as of late, yeah, it kind of just does something a little bit different than what you do in the secondary, right? So you're not bringing in a a big investor to take the place and offloading it onto them, I would say your management would feel that this is a great valuation for the company to take it internal rather than to just parlay it off and get liquidity for the shareholders. I mean, at the end of the day, you're doing the same thing,
right?
But if they thought that was expensive, they would try to get a VC to take that, right?
Right.
So again, I think that shows there's a strong outlook for the company, or stronger outlook, because they're not trying to pass the buck here at all.
Yeah, right. But Clint, if you're the CEO of ByteDance and you're doing a buyback, like you're not raising capital anymore. Like I would think you're signaling to people you're doing a buyback. That's it. You're cash flowing good enough to fund all the things that you want to do and growth and everything, right?
Yeah, I mean, think about the decision, right? You're saying, hey, I'm gonna part with this cash that can be reinvested at an X rate of return in R&D or other acquisitions, or market share capture, and instead I'm going to invest it in my own company because I think it's that cheap. That is essentially what they're telling the marketplace, and I think it's a great show of confidence. I mean, it's sad they can't find anything else to do with the money, but hey, if the stock's cheap and they're that confident in their outlook, they're going to get a better rate of return for investment in their company. Have at it.
Yeah. It's so interesting, these businesses. I tell you, it's because, Clint, you're right. Like these China focused tech companies just don't get the same kind of valuation multiples as other global companies do. And the only reason I can think is because they're Chinese companies. That's it.
The cycle,
right?
Yes, the cycle. Look at China relative to the U.S. Look at the value of Chinese equities on the public markets. You're seeing, I don't know if it's the exact same thing, but you're seeing something very similar play out in the private markets. I mean, these companies are massive, huge user bases, very attractive. If they're in the U.S., they'd be going for 10x the multiple they're going for.
Right.
With the metrics that they're putting out. And so you can make the argument, I don't think it's a case, but you can make the argument that, the market doesn't believe the numbers. I look at it very simply and I say, where is the trend? And the trend is clearly down in Chinese equities and sentiment for Chinese equities. And so I think anything with China attached to it is riding the trend in the wrong direction. And so I think for value players out there, it may at some point provide a nice, unique opportunity. That's why I'm kind of bullish from a long-term perspective on these venture-backed pre-IPO or whatever, but private market opportunities within China.
Yeah,
right. You're almost doing a macro play here to a certain extent, because you hit on a nice part. You have so many more users on the Chinese platforms than we ever could domestically, right? But also the value of those users is substantially lower than the value stateside. Right. Because even if you're playing with Google's YouTube, right? The number of cents you're going to get off of, or fractions of a cent you'll get off of a viewing outside the US is so much lower, because it's the value of the product that you're going to end up selling, you're not going to get as much return on. Right. So it's all that macro play is very much, is there going to be better spending out of China on a dollar for dollar basis or PPP basis, right?
Yeah.
So I think it almost doesn't matter if you're buying into more of those public names that are undervalued or the private names that could be undervalued.
Yeah.
It's definitely just betting on the country as a whole to a certain extent too.
Yeah. So so I've done some stuff in China, right? With crane shares.
Yeah, more than the two of us combined.
But I will say that, like, we're about to hit a presidential election, so it's going to get real bad. China bashing will hit peak China bashing here over the next 12 months, right? As we head into the presidential election. And then after that, it usually calms down for a year or two, right? Before you hit the midterms. To that point,
did you see the headlines today, Aaron? To that point, did you see the headlines today?
No,
the headlines today were about, China hacking into our critical infrastructure. They've supposedly there's a Chinese cyber army is what they're calling it, is hacking into our critical infrastructure. That's been all over the news today. So I think you nailed that one.
So
it's starting.
This is going to be, it'll be peak China bashing for the next 12 months. And then right after that, new president will come in or whatever, however this shakes out. President will be in, election's over. And then all of a sudden it will be like everyone's buddies again. They're all meeting, at places, everything will be nice for about 2 years. And then the midterms will hit and it would be peak China bashing again.
That's the
for
cycle.
another couple cycles. So it's
first them. It's a classic narrative. Classic narrative.
listen, it's easy to understand for a lot of people. You got to have an enemy, I suppose, right? And that's maybe an easy target. But okay, so all right, so SpaceX. Let's talk SpaceX real quick. So they announced this past week they're doing a tender offer. This is their standard, like every 6-month tender offer, $175 billion. Okay, which is up from $150 billion this past summer, right? So it was $81 a share in the summer, and now it's $95 a share, and it looks like it's going to firm up around there, right? So that's a 17% increase from July, in the summer when the last round was, and then from the beginning of the year, it's up 28%, right? So we talk a lot about SpaceX, so I don't know how much you guys want to get into that, but any thoughts about SpaceX, the valuation? Starlink's coming down the pipe, adding a ton of revenue, right? And that business, you know, what is 175 a good number? You guys bullish on where this company's going? What are your thoughts on SpaceX? Maybe Nick, why don't we start with you, man? What do you think about SpaceX?
The more I look at the frequency of them doing these offers or the buybacks, it's really interesting. Like the price they're setting is almost methodical. It steps up consistently, and it's almost not even market driven. It's kind of like it's driven by them internally at SpaceX.
Right.
So if we can see these coming, and there's always enough demand to satiate it, I can look at it as, is it the tail wagging the dog? Or I can look at it as, it might be worth way more, interestingly.
Right. Fair.
And they're throttling it because there's so much demand on the back of it.
Sure.
Because every time we're looking at the market, SpaceX is one of those other anomalies in there. It's defied where other private markets have performed over the last year or two, even in that down market. And then the buy side demand on it has been traditionally higher than most other stocks as well.
Right.
So I don't know which way it's going to go, but I feel as though they internally as a company have so much control over that share price that it's not necessarily going to be correlated as well to other names in the market.
That's a cool take.
That's just a point. It's just an interesting one. I haven't really delved into that before, but the fact that it does step up so consistently, and we're seeing
remove some of that volatility. No, that's
exactly.
A really interesting point. That's a very interesting point. Clint, what are you thinking about SpaceX?
I mean, I think Nick's point's fascinating about controlling the narrative. Love that concept, but I think it's cheap. I mean, I think Starlink alone could be valued at the current valuation for the overall company. I mean, I think what he's doing is game changing. I think when you start to really go down the rabbit hole of the monopoly that he has on space, not only, just the logistics, the space marketplace, he's building a platform, a space platform. And if you are thinking that is a positive trend, right? Long-term space, in space exploration, space travel, just all of the different ancillary businesses you can attach to that, then I think you got to be a bull of SpaceX. It is the platform. So I'm fascinated by the company, fascinated by how they control the narrative, fascinated by Elon Musk and how he keeps winning despite some volatility. But hey,
well,
he's
I think he's losing some battles elsewhere.
He is.
He's still net positive though.
Yeah.
I still think he's net positive. Yeah. It's interesting the stuff that he gets news about, right? And I think when you look at it in the total picture, at least where a lot of his net worth's coming from, I don't know, just a lot of noise, but then the foundation of it's like rock solid. So it's interesting. He's an interesting guy. SpaceX is a special company. Unlimited real estate in space, Clint. So to your point about building that platform, there's a lot of different things that could come out of that business. But Nick, really good point on that. I hadn't thought about that point about kind of a more measured or calculated, valuation step up. That's pretty insightful stuff.
Yeah, but just at the broad sense, no one could put things up in space like they can.
Yeah.
Right. They're outpacing NASA. They're outpacing every country on the planet.
Yeah.
So if someone's going to try to catch up, it's not going to be.
They got a big moat.
Be a quick initiative.
Yeah, and if they get the Starship going too, man, that's an even another big giant step forward for them. So, yeah, it's such an interesting business. But All right, so last topic, we'll hit Epic Games, right? So Clint, maybe I'll throw it over to you since you're our North Carolina guy. And Epic is their North Carolina company, but Epic took a big investment from the Lego family, right? So Kirkby is the family that owns Lego Group. They invested $1 billion into Epic Games in April of 2022 at a $31.5 billion valuation. Next data, AViews got Epic down 65% since then. So they're like the implied valuation is $11 billion. But what happened this past week was they launched the Lego Fortnite like experience, right? The metaverse experience. They had 2.4 million Lego players on in this experience, which was a record for Fortnite. So it's like a huge deal for the game and the company. So, Clint, like, what do you think about Lego? That's a great brand, right? But what do you think about Lego, Epic Games, the benefits that the two companies get off of each other? I got to imagine this is a way bigger net positive for Epic Games, right, than it would be for Lego, perhaps.
I think it's just another case in point of Epic Games leading the race in the metaverse platform space. Eminem doing a concert last time we talked about this, right? The weekend before, you've got Travis Scott did a concert there. You're going to have more and more large companies partner with Epic as a platform for the metaverse. It is the most developed metaverse, in my opinion. Meta's probably a close second, but it's from a user base and active users, there's nothing close. I think it's great for Epic. I think it's great for other companies that partner with the brand. It opens up a completely new distribution vertical. And for Lego, it makes a lot of sense, right? Because there's probably a lot of crossover between their typical clientele or customer experience, and this is really for those folks. It's an elevation of that experience, possibly digitization of the experience,
right?
And there might be people who haven't experienced Lego in the digital space, other than maybe a Lego movie here or there, right? But a different way to interact with the media and with the brand, and I think that is strong. I mean, I think it's strong for both companies, but I think you're going to see a ton of traditional organizations that operate in traditional distribution channels move to the metaverse over the years, and I think Epic's going to win that game.
So Lego's an early mover then. So Nick, what do you think just on this kind of like tie up, but then also just the company, right, itself and kind of where it's trading at?
Well, I love to compare it. First, to compare Lego to the knockoffs when we were kids. You go to your buddy's house and you bring a Lego or something and it doesn't connect. Like, what the hell? Like, it's a knockoff fake Lego. The biggest knockoff fake Lego in my mind is Roblox for a lot of intents and purposes. If you're looking at that on a value perspective, their market cap is something like 25 billion. So if we see that Epic Games is really creating the best metaverse type experience, they're having these connections with not the knockoff Legos, but the real Legos. And you're getting core investors. I think you're going to be up way north of that. What did you say? It was $10 or $11 billion figure. There's a lot going for this, particularly the draw to Fortnite, the draw to all these other games. And maybe this is a really good case. If it were a public company, it would be valued way above where we have it today. Interestingly, and similarly to what we had said on ByteDance the other day, or this morning, or whenever we want to tie these podcasts together, right? It's different because we're seeing more sell pressure on this company than what we have with ByteDance. But you're still seeing funds value it in and around where that deal took place several months ago. So that's a really interesting point. And are the insiders just not as bullish as the three of us on this call, or not as bullish as the funds, or the funds just delaying or prolonging that write down because they are relatively static versus the secondary market, which has shown more volatility on the name. So where do I think it's valued? Probably somewhere between the two, but there's about a 30 or 40% delta between them, right?
That's interesting.
I would say no one is exactly clear where this is going to shake out, and this is that long duration play that Clint and I spoke about on the fat pitch, actually. So I think on the long road, this is a winner. On the short term, no one really has their head wrapped around, is this thing going to make enough money that it should be valued along its peers? And even Roblox has been getting beaten up a little bit, I think, in the public market. So,
well, but Clint, so to that point then, right now, so Clint, like if you're buying pre-IPO stocks, you're not doing that for a year or two, right? You're probably in there for the long haul. So this would be, if you could get in and around that $11 billion valuation number, that's a good entry point, I would think, right?
I mean, based on previous rounds, right?
Yeah, of all things, the secondary is at the lowest. Yeah. It's probably a fair bet.
Go ahead, Clint. Go ahead.
No, I was saying, based on previous rounds, I would say that is, a good entry point. But again, that's you got to have a long-term view. To Nick's point, this is these companies are duration play, and this is a duration play. And if you look at everything kind of in the metaverse getting smoked, with the exception of Meta this year, I think that is possibly a nice time to start to pick up the pieces. And again, Epic's just so mature from that perspective, and you got all these different avenues for creating value. So yeah, I'm a bull on this company for sure. Definitely a bull. I hate the bull bear theme. I like this company. How about that? I think this would be a good entry point.
Yeah, and relative to last rounds, it's an interesting thing. I just put a post out this morning on Twitter that was in before 2022, secondary was trading above your primary. During 2022, there was just secondary for the most part. And then after 2022, we're trading at a discount to primary. And I think in this case, that's still going to be the case that we're down like 30% or whatever. But our average that we've been seeing on back testing for the last 2 years, or maybe it was 18 months to keep it closer to the near term, we were 7.88 below primary rounds on a T-1 basis. So the fact that this one is 4x that's great.
Yeah,
that looks really good. As long as you're bullish on the metaverse, right?
Yeah,
there's a lot of thematic aspects of this that are relevant.
Yeah, the gaming aspect I think is huge. I think to your point, Nick, like Roblox is a competitor. One thing I failed to mention is that this Lego, experience has a lower age range than your average kind of Fortnite game. So they're like kind of picking up potential new, new market segment with younger players, which I think would also then compete with Minecraft. Right. So there's like this Minecraft aspect to the game. So, this is an opportunity for Fortnite to start to compete with some of these other probably primary competitors they have with like a really good brand, Nick, to your point, and probably pick up some new demographics. So I like, this is great. And then to Clint's point on the broader metaverse, I mean, Unreal Engine and MetaHumans and some of the things that they're doing in that space is just incredible. So I think, Apple Vision Pro hits the market. The Meta Quest 3 starts to get adopted. They're supposed to have more stuff coming. Augmented reality glasses hit the market. Like all of the stuff that's coming, I think you got companies like Epic Gums are going to capitalize from that stuff. That's just a few years down the road. So cool. All right. Anything else on your guys' mind this week? Any other topics that are hot?
It's dropping.
Yeah, man. It's Christmas. I'm ready.
Christmas
I'm ready for this. I'm ready for this year to wrap. Okay, fellas, this is great. Thanks for taking time to talk today. And I appreciate you guys. I'll see you guys next week. Okay.
Thank you.
All right. Cheers.
Love you guys.